So we are doing a sum of Feb March 21, paper 22. And this is a sum of marginal costing. We're saying that K Limited produces goods at two sites and he is using marginal costing. At one site, the company is making a single product and the following details are available with us. Maximum capacity is 14,500 units. Fixed cost is 216,000. Unit selling price is 19. And I have direct material, direct labor, and other variable cost. So if I say sales is 19, and I have my total variable cost as how much? 25 plus 36 plus 11. So the total variable cost is 72. So I can find out my contribution, and my contribution would be 90 minus 72 is 18 per unit. They want the break-even points per unit in months. How do I calculate the break-even point in units? So the break-even point in units is fixed cost upon contribution per unit. What is my fixed cost? My fixed cost is 216,000 and contribution per unit is $18. So break-even point in units is 12,000 units. So that means if I sell 12,000 units, I get no profit, no loss. Define the term margin of safety. So if I talk about margin of safety, what is it? It is a difference between what? It is a difference between actual or forecast sales. It is the difference between actual sales, or you could say it is a difference between forecast sales and break-even sales. That means the extra unit that you sell over and above the break-even point is called the margin of safety. So it is a difference between actual sales and break-even sales. Now they want me to prepare a marginal cost statement. Whenever they ask me to prepare a marginal cost statement, I should know one thing in mind is sales minus variable cost is contribution, and contribution minus fixed cost gives me my marginal cost statement. So one thing clearly that I should know is sales minus variable cost is contribution. Let's look over here. What is the information that is given to me? I've been asked to prepare the marginal cost statement. So the first thing that I will do is the revenue. And they are selling and they are telling us that reduce the selling price by 2%. That means if I have $90, I will reduce by 2%, that it is 98% of $90. So it will become 88.20. Okay, the directors have decided to make the following changes, and I am just seeing the changes that I have to make. So I have to reduce the selling price by 2%. So I will take 98% of 90, that is 88.20, minus the variable cost. Now let's see what is the variable cost. Introduce a sales commission of $2 per unit on every unit sold in excess of 5,000 units per month. So anything that you are selling in excess of 5,000 units, anything that you are selling, you are going to give a sales commission of $2 per unit. Purchase direct material in bulk and obtain a trade discount of 20%. So I am going to purchase my direct material in bulk and I'm going to get a trade discount of 20%. That means I am going to pay 80% of 55. So 25 into 80% of it is going to make it 20. So the direct material cost will become 20. Buy direct material in bulk with increased storage cost of 4,000 per month. That means I will have an extra fixed cost of 4,000 per month in additional to the original fixed cost. So my fixed cost will be 216,000 plus 4,000. Demand will be 98% of the factory capacity. Factory capacity is 14,500 units. So demand will be 98% of it. So 14,500 into 98%, it is going to become 14,210. So when I take revenue, I calculated my reduced selling price at 88.20 multiplied by 14,210. So I will get my revenue. Less the variable cost, direct material. Direct material I did, it would be 20 into the capacity. This is direct material. Direct labor, I was not given anything, so direct labor would remain 36 into 14,210 units. So it will become this. Other variable cost, there was no information that was given to me for other variable cost. So other variable cost would be how much? $11 into my new capacity as per the demand 14,200. Other than this, they said that you should give $2 per unit on every unit sold in excess of 5,000. So in excess of 5,000, I'm selling 14,210 units. 14,210, I will deduct 5,000 units. So I will get 9,210 units. And on this 9,210, that is in excess of 5,000 units, I'm giving a commission of $2 per unit, so it will become this. My total variable cost is 974.90. From the sales, when I deduct my variable cost, I will get something which is called the contribution. I will deduct the fixed cost. My fixed cost is 216,000 plus 4,000. So my fixed cost is 220,000. When I deduct the fixed cost, I will get my profit for the month. So I have prepared a marginal cost statement to show the monthly profit based on the above changes. So what is the advantage of using marginal costing? The first advantage of using marginal costing is that it is useful for short-term decision making, as it assumes that the costs that a business incurs can be separated. By separating the fixed and variable cost, it assumes that the fixed cost is separate and variable cost is separate. Marginal costing does not take fixed overhead into consideration, and it gives me useful data for cost control because it assumes that the cost that you need to control is the one that increases in direct proportion to the variable cost. So this is the advantage of using the marginal cost statement. Now here, calculate the machine hours available in August 2021. See, this is the contribution per unit. In an other side, the company is making three products. One is product X, one is product Y, and another is product Z. And I have the details of product X, product Y, and product Z. Contribution per unit is 15, 20, 27. Machine hours per unit that is needed is 1.5, 2.5, and 3. What do they want us to know? The machine hours available in August 21. In August 21, I can make maximum 600 units of product X. I can make 300 units of product Y, and I can make 200 units of product Z. I want to know the machine hours available. So I am going to make 600 units and I need 1.5 hours per unit. So machine hours available for product X is 1.5 into 600. Machine hours available for product Y is 2.5 into 300. And machine hours available for product Z is 3 into 200. So the total machine hours that is available is 2250. The total machine hours that I need. Each month, the company plans to work full capacity, producing maximum output of each product. But in August, only 2/3 of the month's machine hour will be available. So if I make the maximum output, I am going to need 2250 machine hours. But in August, I am going to have only 2/3 of the month's machine hour. That means I'm going to be having only 2/3 of this month's machine hour. I'm going to be having only 2/3 of 2250. So machine hours available for the month of August is 1500 hours only. Now, if I have less machine hours available, it means that machine hours is my limiting factor. When I say it is my limiting factor, if something is less available, that means that something that is less available becomes my limiting factor, and I will definitely be asked to prepare an OPP, that is optimum production plan, which is made keeping the limiting factor in mind. So now let's see what is the requirement of the question. So whenever something is less in supply, that becomes a limiting factor, and they will definitely ask you to find the optimum product plan. Optimum product plan tells you that you make that product first that gives you the maximum profit per limiting factor. Optimum product plan will tell you make that product first that gives you the maximum profit per limiting factor. So which product is going to give me the maximum profit per limiting factor? How will I come to know? I will come to know when I divide by contribution divided by limiting factor. So I will know which product will give me maximum profit per limiting factor when I divide the contribution divided by the limiting factor. Let's see this. And let's see the requirement of the question. The company has a regular order to supply one major customer with 50% of the output of each product per month. That means I have a regular order wherein one customer tells me I need 50%. That means I need 300 units of X, I need 150 units of Y, and I need 100 units of Z. Now I have two options that I have to consider because I have shortage of machine hours. I have less machine hours with me. So what are the two options that I have to consider? Finance director has recommended that the company makes maximum profit possible in August 21. Finance director tells that you have to make the maximum profit possible. If you have to make the maximum profit possible, that means you have to make the optimum product plan. And if necessary, not complete your major customer's order. So your option 1 is telling make an optimum product plan. Option 2 is telling sales director is telling that you should first fulfill your customer's order and then produce whatever you want. Now you should remember that I have only 1,500 machine hours. In that, I have my option one, that I have to go with my optimum product plan. What is my optimum product plan telling me? Let's see. This is my question. I have three products. One is product X, Y, and Z. Contribution per unit is 15, 20, 27. I have to calculate the contribution per machine hour. What do I have to calculate? Contribution per machine hour. So what is the machine hour that I need for X? The machine hour that I need for product X, if I produce the maximum capacity, is 900. Machine hours that I need for product Y is 750. And machine hours that I need for product Z is 600. So now I will find contribution per limiting factor, that is contribution per machine hour. So it would be contribution per limiting. So machine hour per unit. I want to find contribution per limiting factor. So I will take contribution divided by machine hour per unit. So contribution per limiting factor would be $15 divided by 1.5, which will give me 10. Contribution per limiting factor 20 divided by 2.5, it will give me 8. Contribution per limiting factor 27 divided by 3, 9. So this is my normal contribution and this is my contribution per limiting factor. As per the contribution per limiting factor, I have only 1,500. I have only 1,500 hours. And my ranking tells me first I should produce product X. Then I should produce product Z because it gives the second highest contribution per limiting factor per machine hour. Then I should produce product Y. So full production should happen for X, and full production of X requires 900 hours. So from 1,500 hours, if I remove 900, I still have how many hours? 1,500 minus 900. I still have 600 hours. So 900 hours I will use to make how many units of X? 600 units of X. So I will make 600 units of X. 900 into 10 per hour, which will give me 9,000. And I have hours remaining how much? From 1,500 I minus 900. Then I will produce second product Z, production Z. Full production of production Z would require how many hours? Full production would require 750 hours, but I don't have 750 hours. Okay, I can produce production Z, sorry, full production of production Z would require 600 hours, and I have exactly 600 hours. So I can produce 200 units of product Z. So 600 hours into what is the contribution that I'm going to get? 9. So 600 hours into 9, I'm going to get 5,400. My total contribution will become 14,400 minus my total fixed cost, that is 14,100. I will get profit for the month 300. Now my next thing is option 2. Option 2 tells that you should fulfill your customer's order. That means first what you should do is you should produce, you have how many hours? 1,500 hours. So you should produce 300 units of X, 150 units of Y, and 100 units of Z. 300 units of X is going to take how many hours? 1 unit is going to take 1.5 hours, so 300 units will take 450 hours. So 450 hours will go away for X. For Y, 150 units would take 2.5 hours. So for Y, 375 hours will already go away. And for Z, 100 units is going to take 3 hours. 300 will go away for Z, 300 hours. You will multiply it with the contribution per limiting factor that you're getting, 10, 8, and 9. 10, 8, and 9. Now, how many hours are remaining? 1500 hours you had minus 450. You will have 1050 hours. 1050 minus 375. You will have 675 hours. 675 minus 300. You will have 375 hours. Now you have 375 hours remaining. Now, which product you will produce first? First preference is given to product X. You have 375 hours remaining. How many units you can produce of product X? 300 units. 1 unit of product X requires 1.5 hours. So in 375 hours, how many units you can make? So you will do 375 divided by 1.5. So you can make 250 units. You can make 250 units of product X in 375 hours. You will multiply it with the contribution per limiting factor and you will get 3750 as your total contribution. You will add all this, your total contribution is 13950 minus the fixed cost. So if you fulfill your major customer's order, then you are making a loss for the month. Advise the company which option should they choose by discussing both the options. Choosing option 1, you're definitely earning a positive contribution. You are making the best use of your resources and you are making profit. But at the same time you are not fulfilling your major customers order, so maybe that person will opt out and would choose another supplier. If you are choosing option 2, then you are making a loss for the month, but you are keeping your main customer happy, which may give you a long term benefit. If the company has the position to bear the loss, they can fulfill the customer's order, or otherwise they should normally adopt the optimum product plan. So this is how we complete one more sum of marginal costing, which is a very important and very nice sum of Feb March 2021, paper 22.